Hi, everybody. I guess we're quite late in the day, so we'll keep this to the point and try and keep you awake. I guess you've heard a lot about education and EdTech specifically. And we as money people, or certainly those that are involved in money in one way or another, would like to sort of think about, okay, does it need to be profitable? Do we want to be impact? Do they live together? And I think clearly, as you've got a very broad panel here, does it matter, and is each geography slightly different? So with that, I think excellent to have Gao Fei here. He's from China, works for ATA, offices in Shanghai and Beijing, and also invests in the US. We've got Yonatan Machado from JVP, a leading Israeli venture capital fund with offices headquartered in Jerusalem. And we have Josh Schwartz, who's also joining us. He's an ex-banker from Bear Stearns, and today is leading a boutique Eastwind out of New York. And Julian Kannigan, who also, coming from Africa, is an investment principal with A1 Capital. So with that, let me start off first of all asking, do you need to have an impact element in order to raise money, or does it really not matter at all? What's your thought on that, Josh?
Thanks for that. To start with a provocative question, but I'm glad that you did, because I think we need to clear up possibly some confusion in the market, and that exists because up until recently, you probably couldn't talk about ROI investing in education. Most investments were made based on a social mission, and I'm here to say very emphatically that in the last 10 years, the education industry, particularly in the United States and now China and in other markets, can stand on its own 2 feet in terms of supporting investments purely based on ROI. And that doesn't mean that there's not room for impact investing, but if we walked through the investors in the US who have been set up to focus exclusively on education, or blue chip, venture capital, growth equity, and private equity firms who have billions of dollars under management, more often than not, you will see within those portfolios very significant portfolios of education investments. And I can assure you, these firms are not mission-driven investors. They're investing for ROI. That being said, I think many of them do like the fact that they can invest in companies that deliver a double bottom line, and I know that a lot of their LPs also like it. And then just one other thing to think about, when you make an ROI investment in an education business, there is an impact, but there's another impact that you could think of, which is the multiplier effect that you get in the economy when an education company succeeds in its mission, because you end up with a much more educated population. More educated population has greater earnings power, pays more taxes, et cetera, et cetera.
What's your take, Julian?
Andy, I can just speak from coming from a South African perspective, and we are a private boutique investment house that only invests in education, and that's higher education. The short answer is that a natural byproduct of the investment has that social impact. So, like Josh will know this as well, we're coming out of GSV conference in Utah, and it's almost, the buzzword to talk about social impact investment is a nice thing to say. It has elements of being utopian in a sense that does it really get to do what it's supposed to do? And I can tell you from a South African position is that that's not our mission goal in life to say this is what we're going to do. But are we taking access in terms of education to the masses across continents and countries that do not have access to quality, competent education that has an outcome that's successful, that will lead you to get a job, and that is a betterment for you, your family, and a generation thereafter? Then are we making an impact? Yes, we are.
First of all, thank you for having us here, for the organizers. I would add to Josh's comments, actually, the combination of the trend today in the world of impact investing is such that could really benefit VCs that are operating in purely ROI worlds that also have impact. Because you really get an additional source of funding to your companies. So you see, when you invest in a cyber company, for that matter, I don't see you going to the Gates Foundation asking for them to join the round. But if you're investing in a seed around a company that is doing, good for the world, and it doesn't have to be EdTech per se, but in this case, EdTech, you might very, very well find yourself collaborating with significant capital resources like those major foundations that in turn, coming from the nonprofit sector, are looking for that world financial sustainability. Julian, like you mentioned, a very sexy term in the nonprofit world. So they're looking for the ROI case, or at least for the sustainability case. And I think it's a great example of how purely profit can collaborate with the other world and then create the impact in turn.
Yeah, actually speaking, we are purely financial investor. And the situation in China is a lot of different between China and the Western developed countries. May I have a story? Yeah. My name in Chinese is Fei Gao. Does anyone know this mean in Chinese? Yeah, I will tell you the answer. The literal meaning of my name is my parents' hope. And they hope me to get a high scores in exam, and then I will have a bright future. And so my name is a little bit heavy for me, so please call me Ryan. Ryan is my English name. Yeah. Yeah, it's a little pressure. Yeah. Actually speaking, I guess the most known education company, maybe the New Oriental, the GAL. Both company are nationalistic company, and they have benefit handsomely from the private tutor for China. In our country, I don't think this tradition is good. Although the two companies I mentioned, the New Oriental GL have existed for 20 years, but the tradition of exam or private tutoring has existed thousands of years. We can trace back to year 600, the Sui dynasty in China. The king of the Sui dynasty set up the national exam system and to replace the orange system. So in China, we have the social ladder. The social ladder first occurred in Sui dynasty, and back to now. When people talk about the Chinese education market, the first thing come to their mind is that how obsessed the parents with the high scores, with the private tutoring, and this is what we faced in China. And I want to see that the public data show that only 1% of the junior high school students can be accepted by the high school. The high school. I mean the model high school. Now in China we have 200 million kids and teenagers, but we only have 100 model high school in China. If you are so lucky to accept it in the model high school, you are the elite one, but only 1% of the high school graduates can be accepted by the C9 university, the best 9 university in China. So the competition is very, very fierce. So I want to see that in China has a huge territory and a lot of amount of people, and the eastern coast, the province and the central province, their education resources is not the same. So as you ask me, we have we try to make some balance between make money. Make money is is my job, and between the make some return, make some impact
So if I
to the
sort
society.
of pick up what you're saying that EdTech people really need to deploy
Yeah.
anything they can
Yeah.
if it improves the
Yeah, yeah,
Gao average, if a student gets better grades. What's the situation like in the States? I mean, is it as intense? Do you go to one of the foundations? I mean, do you sort of find a balance? It seems to be that China, it's very extreme. You've got to still perform, not like we heard earlier, but everything's based on the result. What's the situation like in the States?
Well, I think that there's a lot of pressure coming. If we're talking about K-12, there's a lot of pressure coming from the legislative agenda and the policy agenda, and what I think many people call the accountability movement. For years up until the early 2000s, there was virtually no accountability in the K-12 school system. Legislation was adopted that for the first time put pressure on schools to produce academic achievement, and that introduced a testing regime, and a test prep ecosystem, and there were real consequences for not making yearly progress. Schools could actually be shut down. So, in turn, the market, and in large part, nonprofits and the growing population of for-profit vendors to the system reacted, and it was an incredible opportunity for new companies to respond to this new legislative mandate. There was money available for it, and the companies that got it right created a lot of value very rapidly. There were some companies that got it too right and grew too quickly, flew too close to the sun, and crashed and burned. But whenever you tether yourself so closely to the legislative agenda, you're vulnerable to the election cycle and a change in the administration. And what ended up happening in the US is after the Bush administration left and the Obama administration came in, they decided to change the focus and granted waivers, and a lot of the companies that were aligned to the Bush agenda crashed and burned. So there's a lot of pressure. That's what makes investing in education very challenging, that you've got the legislative mandates and the like. But the last thing I'll say is, and the reason why in the United States school choice is such a big topic is there's a whole customer base outside the school system, which are parents. And to the point about China, parents increasingly are trying to give their kids an edge by investing in their education, and certain ethnic groups invest more in education than others, and a lot of companies are now focused on B2C models to try and tap into the billions and billions of dollars that are being spent there as well.
So I must say I'm a little confused personally now. I'm saying, okay, I'm an entrepreneur now thinking of EdTech. Where do I go? Do you think I should, obviously I'm going to start in Israel, but where's the end market? Because if I'm sort of taking from you, by the way, I don't think there's that many American companies listed on the stock exchange. There's certainly 4 or 5 Chinese that are. What do you think? What are you going to be looking for? And so what's the exit strategy as well?
Well, I think EdTech in this sense is not different than, I guess, many other sectors from the point of view, from the entrepreneur point of view, coming from Israel. The B2C approach is less common. We're not in the market. We're not familiar with the market. I think, from my knowledge, the EdTech space, especially the K-12, the gaps between what we have here in Israel, the culture, the system, and even between different states, and the regulation around it is a very hard. It's a lot of knowledge. It's complex. You can't just jump into it and hope. It's not like a Waze app that you can just hope is going to be adopted. That's on the no side. On the yes side, what we've seen working for entrepreneurs in Israel is the technology edge. The thing is, if you look at the rather bigger successes in the EdTech space, both on the M&A side and the IPO side, you usually see companies from the two main waves of EdTech, whether connecting the schools or digitizing the content, which is a much lower barrier to entry, much more of a market play or execution play, which traditionally speaking, if you look at any sector, comparing the Israeli side with the American side, we usually fall behind. I think today, the AI, forgive the buzzword, so NLP, computer vision, machine learning, and the like, actually poses an opportunity for Israeli entrepreneurs. The EdTech space is looking for personalization. There's a lot of data involved. There's tough questions and problems to solve, like measurement. I think what you mentioned was very much driven by the need to measure how schools perform. And if we'll go and follow, hopefully, Saul's advice as to how the education world is going to look after, we're going to have a real trouble measuring success. And I don't think any of us as parents, it's always funny when you come across a startup in the world of EdTech and they suggest something, you're like, oh, that's a wonderful idea. And then he's like, so how about start with the school of your children? Let's let somebody else be the guinea pig and let's wait for my kids. I want them still to go to Yale or wherever it is. So the questions of measurement and all these type of personalization questions can be solved using tech in areas where Israel is known to have strength in, and this is where we would look for the opportunities.
And as far as Africa, do you think it's a market which Israeli companies should be looking at, or are you looking actually just to, what do you see the angle?
I'm actually speaking tomorrow about what Israeli companies can do, so maybe I shouldn't be attending tomorrow if I answer the question now. But just talking about one of the things that we are passionate about in terms of creating access to education, and I'm just going to use an analogy between one of the largest global companies in the world, Laureate, that just went for a listing about 2 months ago, and the amount of money that they managed to raise on a market cap of $4 billion. And then if you have a look at the balance sheet of Laureate, it's sitting at $4 billion of debt. So what that says to you is that the company is not actually worth anything. Then as a traditional business, 1 million students, 6 continents, 80 campuses. On the other side of the fence, in the EdTech space, you have a company like 2U, sitting out of the US, 1,400 employees, been in existence for about 6-7 years, listed $2 billion. So now you ask yourself, you don't have to be sitting in Omaha to figure out, listen, where do I take my dollar and place it? And it goes a little further than that. About 3 weeks ago, 2U bought a South African company, and I'm being totally unbiased when I make the statement, for $100 million. Ed, startup business, simply a platform, had university partnerships, skills program, not even undergraduate. And then thereafter, you see the value. So now you ask yourself, you're sitting in Israel, you have these platforms, you have this technology, you have the access to the expertise and the IP. This is what's going out there in the world. So what do you do about it? So even for us as private equity guys, we sit down in Cape Town, South Africa, on top of Table Mountain, and we ask ourselves exactly the same question, and where do we take our dollars, and where do we place it? But I can be bold enough to say to you, just after spending a short time in Israel, that what has to come out in respect of the EdTech space doesn't necessarily mean it's going to come out of Silicon Valley. It could verily come out of the startup nation, Israel.
And Gao Fei, what's your, what do you see? Do you think the system will change in China? Do you see changes? I'm sure you heard Saul earlier talking about maybe the whole structure's wrong, that we're not teaching the right things. But in China, everything is just about this grade that I'm going to get on my Gaokao.
Yeah, as I said before, like the developed country, China does not have the solid middle layer of these public schools. All we have is the both end, the top tier or the lower ranking. If you are unlucky to get into the lower ranking, and the teaching quality is not satisfied, and we have invested $30 million in the past 2 years, and half of this money was poured into the middle range of the education structure. And for example, I have invested a target named DGH 3 years ago. The DGH provides the online course to K-12, mostly the kids mostly from the lower tier city of China, the central, the South China. And I think maybe this is example to answer your question. We try to make some balance between the money and the social return. And as I said, China do not have a lot of the qualified teaching resources. So we want to use some advanced technology, some good content or service, maybe in Israel or United States. We want to bring these good things to China and to make the excellent education more equitable. Yeah.
Excellent. Thank you. Getting back to the subject of our panel. So do you think, and I think a differentiation between certainly China where they are and the States, in China yet I don't think they have the huge foundations and large family offices that are in some way donating a lot. Do you think it matters to them in the US, or are they looking for a profit, or are they just looking to do better?
I'm sorry, just the foundations in
the foundations, the Gates Foundation and others, are they looking to invest just to do good? Are they looking for a return, for profit? What do we do, and how is it possible for an investor to get to them as well?
Right. So we've actually transacted with the Gates Foundation, so I know firsthand how they operate. They tend to spread grant money around in an area that they want to develop, and so they stimulate demand for products. And then they've been exploring direct, what's called PRI investments, program-related investments, where they'll take one of the grantees and they'll actually make a direct equity investment in it. They're not a professional financial investor, so they tend not to lead those transactions, but they'll come into them. And I do think that they're primarily motivated by the mission, and that's clear because they won't make those investments without a side agreement, which has certain, call them obligations on the part of the company to operate in a manner which enables the foundation to say that this is in pursuit of their mission. It raises interesting questions for the other VCs, the ROI investors who are sitting around the table, who are looking at the company signing one of these agreements that says, oh, you need to offer your services at a discount to this part of the population. But in general, at least in our experience, the VCs actually, they looked at it very closely, but got comfortable that that this company that we're investing in will be a better company if they're serving a broader slice of the population. So I think in most cases, foundations primarily promote their missions, but they don't throw money away. I think they're only making investments in businesses that are sound. I think where you really have a distinction, and this is an important area in the U.S., and I expect it'll be an important area in Israel as well, as strategic investments. And there you've got strategic operators, some with formal VC arms, some who do it a little more informally, and they're the ones that really have to, as for-profit businesses, they're the ones that have to ask themselves the questions, are we only motivated by financial returns, or are we more interested in, serving our own strategic priorities? And, and I think the best way to get to the answer to that is ask the professionals who work in those divisions, how are you compensated? Are you compensated based on financial returns or something broader than that?
As we are coming to the end, so if I summarize what I'm hearing here, I think you can definitely sense there's a difference between each geography. The US, a lot of wealth and an ability to also fund, not immediately necessary to make a profit, even though it seems that there's a definitely swinging that way. China, very business oriented. You improve the Gaokao grade, make someone more chances more higher that they're going to get into a university and not be one of the lower classes, then definitely a good place to deploy that technology. And in Israel, certainly understanding that we've got the core technology to make that happen. And Africa, I guess, emerging and sort of coming along and maybe earlier on the food chain as far as developing a school system. From my perspective and OurCrowd's perspective, we're very interested, of course, in EdTech and recognize this is a great area. Israel specifically has the technology, and I think all of us will be looking to invest with an idea of seeing how that company will eventually be profitable. So with that, thank you, everybody. Appreciated your insights. Thank you.